should be expecting from the market today. Stan Shamu standing by for us at IG in Melbourne. And Stan, markets are approaching the business end of the week. What does last night's price action tell us?
Morning, Kate. Well, absolutely the question on everyone's lips at the moment is whether or not markets have gotten ahead of themselves over the past few weeks in pricing out quantitative easing. Of course, as we approach the announcement, there was always going to be a little bit of nervousness on those shorts that are, of course, pricing in the fact that the Fed will announce measures to start winding back on that quantitative easing program. But of course, just looking at the price action across the asset classes, it shows a clear case of uncertainty. We've got equities bouncing as shorts are wound back, whilst at the same time we've got US bond yields on the 10-year there relatively flat at 2.18%. We've got currency markets that are relatively sidelined with no real big moves to really show whether or not markets are confident that Bernanke will announce something definitive on QE. And of course, if we continue to look at other assets like gold, which actually fell when the US dollar actually lost a little bit of ground, then it gets even more confusing. So it certainly is going to be a day of positioning today. I think if we actually do consider the balance of factors, particularly the data we've been getting out of the US, it doesn't really tell a confident story. Of course, at the same time, we've got inflation, which is relatively benign, and it's not really alarming enough for the Fed to feel that this easing programs are starting to push inflation higher or anything of the sort. So I think that until we start to see data that really blows the lights out, then we won't see the Fed be in any rush to sort of start pulling back on that QE. So Bernanke might just come out with a similar statement to what he said before, where he just reiterates the fact that should data start improving at a rapid case, which looks sustainable going forward, then that's when they might start looking at winding back on their asset purchases.
Stan, I'm a little confused because this close to the US Fed meeting, we heard from a lot of analysts that any good economic news was going to be interpreted badly by the market because it means tapering is sooner than expected or will come about sooner at least. But that's not how they took the data overnight. It was stronger than expected and the market rallied in response. Why aren't we having that adverse reaction that some expected?
Well, the data from overnight actually looks a little bit mixed. We had CPI data, which is relatively in line with expectations. We had housing starts. There were nothing really special there. I think they were actually a little bit lower than expectations. So it's still relatively mixed, I think, if you actually look at the balance of factors. If you look at the jobs numbers we've been getting over the past few weeks, they haven't really shown a clear improvement, which the Fed will probably want to see going forward for them to actually make a definitive decision on quantitative easing. Of course, what's really caused confusion amongst investors have been varying comments from different Fed members. And I think that's where this biggest source of volatility has been, really. But if you actually look at what Bernanke himself has said, he hasn't really deviated much from his stance that if we do see that sustainable recovery in employment, and of course he's also watching inflation, then chances are we probably won't get a change until such a time when the jobs market looks like it's in a sustainable recovery.
Stan, let's talk about Japan because it looks like they're headed for some pretty nice gains today. Expectations, the Nikkei is going to open up about 1.6%. Why is that?
Well, basically, we saw the dollar gain a bit of ground against the yen. The dollar yen's back above 95. It went as high as 95.77 overnight. Currently sidelined at around 95.40. So that's probably what's going to support the Nikkei today. Of course, Japan's been one of the most beaten up markets over the past few weeks and has been the biggest source of volatility. So I think any chances of an improvement in or further weakness in the yen rather will probably be well supportive of the Nikkei. We also have BOJ Governor Kuroda on the wires on Friday. And with the G8 meeting happening at the moment with Prime Minister Abe over there, it certainly seems like if he doesn't get any adverse reaction to the steps they're taking, then possibly investors might be pricing in for the fact that maybe Kuroda will say something on Friday that might be market friendly. So that might support the Nikkei and, of course, cause further weakness in the yen. So it's quite an interesting dynamic for Japan this week, as after such big falls recently, the bargain hunters were always going to come in and try and support this market, but it's still up to the fundamentals to see if we can get some bond stability and we can get a bit more confidence in the Nikkei going forward, and see if investors are happy to keep pushing this market higher. At the same time, today we've got trade balance for Japan, deficit of 0.89 trillion expected, so we'll have to wait and see how this data comes out, and of course whether or not it shows that Japan's on the right path to recovery.
Spies are pointing to a gain of about 0.7% for us today. Stan, do you think we'll hold on for those gains, or are you expecting a choppy session here at home?
Yeah, we're just feeding off those gains from US equities, currently pointing up 0.8% to 4,851. Of course, we've seen a lot of choppy trading in the local market over the past few days. I think today we'll probably see the iron ore miners get off to another good start. We've got iron ore up another 2.4% overnight, up to around that $117 a ton mark. So that should be supportive of BHP, which is pointing higher, the Open, Fortescue and Rio. But in recent times, we've seen a situation where the loss of confidence in China has really weighed on the miners. And of course, tomorrow we've got China's PMI numbers, so we might see a little bit of positioning there as some investors continue to be worried about China. At the same time, we've got gold as well, which dropped overnight, and that will weigh on the gold names. So we'll see a little bit of a mixed trading in the materials space. But the trick is whether or not the miners and the banks can rally in unison. If we get such a situation, then the market could have a good day. But we're still eyeing that 4,900 level, which is where previous consolidation was, and that's where we think we might see the market start to stall a little bit after this recent recovery.
Okay, we'll keep an eye on that level as well. Stan Shamu from IG in Melbourne, thanks for your time.
Cheers, Kate.
All right, shares of the two companies that will emerge from the split of News Corp will begin trading on the ASX and also in the United States later today. Shares of Class A and B stock for both the new